And up next we have a talk about Taro, which is a protocol to issue assets and stablecoins on Bitcoin and Lightning, and will be held by our friend Leo Weese. A round of applause, please. Pleasure to see you. Okay.
Happy to see you all.
We have like 5 minutes time before the start. So you were starting the Hong Kong meetup, and now how's the Hong Kong meetup? And
the Hong Kong meetup is still around. It's not as public as it used to be, but the core members of the community are still regularly meeting. They're still there. They're still buying Bitcoin. Especially the OTC market is still very hot. It's very easy to walk into a shop in Hong Kong and put cash on a table, no ID, and walk out with typically Tether. Bitcoin and Ethereum are also popular. The spreads are around 1.5% to 2% for Tether and about 2% to 3% for Bitcoin and Ethereum. And that's really the dominant on and off ramp for Hong Kong. I think that's also something we see in quite a few other places. Turkey has this incredibly strong networks of small OTC traders. And I think that does tie a little bit into how a lot of countries are going to develop in the on-ramps and off-ramps. In Hong Kong, it's pretty much impossible for you to get a bank account if you are touching Bitcoin. People had their accounts shut simply for having Bitcoin on their LinkedIn profile without ever trading through their profile. Right? People have been denied bank account. I don't know what kind of search queries they use, but if anything, Bitcoin and your name pops up on the internet, you might have difficulties getting a bank account in Hong Kong. So it's very much cash-driven. It's person to person, and those are very small players. It's very difficult to scale up an OTC operation that uses cash.
Yeah, I can really very much relate to this experience because we see the same happening in Panama. Like if you have money coming in from a Bitcoin exchange, crypto exchange, or going out, they shut down your bank account. We have the first bank with Tower Bank in Panama now moving, and had this crypto law which like was approved 40-0 in the parliament, and I think then the banks called in and said we don't like this, and then the president didn't ratify it, and tons of changes. So I think we have to wait a little bit to the next bull market there. But it's great because when you want to buy or sell Bitcoin, actually this kind of pressure incentivizes this no KYC culture because there's no other way.
Yeah.
But what I hear probably will touch also, that's why Taro or other stablecoin projects are quite important for these OTC operators. The whole stablecoin thing is quite important. And what's your perspective on this?
A lot of the OTC operators, they would be similar people as the one exchanging dollars to euros or dollars to Hong Kong dollars or renminbi, or even on and off board, for example, like Kenyan shilling in Hong Kong, relatively important because so much of trade between East Africa and China goes through Hong Kong. They're not necessarily very experienced in traditional financial markets, so they might not have accessible tools to hedge against the fluctuation of Bitcoin. They might not have like the knowledge on how to most efficiently just calculate their risk as they're exposed to these volatile assets. So for them to exchange a Hong Kong dollar, which is pegged to the US dollar already, to Tether is a big advantage just in calculating their spreads and their risks.
And also, does it trade with a huge markup? Like in, I think these stable coins in Buenos Aires, they trade with a, 200% markup against a normal paper dollar.
So far, Hong Kong still has still has no capital control, still has a very open, financial system. So as long as it's easy to bring in US dollars in and out of the country, you can still bring in like an infinite amount of money into Hong Kong in a private plane without there being any restrictions on this. You do now, only since 2 years ago, do you even have to register cash transactions that come into the country. So the markets are still very efficient. The Hong Kong dollar peg is still alive. So you do have relatively fair prices and low spreads.
Okay, perfect. So I can ask you like probably 200 questions more, but I let you give your talk here. Yeah. Taro and Leo Weese are talking about Taro.
Yeah.
Pleasure.
Yeah. Thank you very much. Come talk to me about all these things, including Hong Kong, including how people buy and sell Bitcoin. I'm going to talk about Taro, which is a protocol. It's not a coin, it's not a token, it's a protocol that defines how to issue tokens, how to issue assets. It's a protocol that defines how these assets are then transferred and eventually deposited into Lightning channels, which I think is what makes this relatively useful, not for ICOs, not for assets that don't move, but rather assets that move very quickly, such as stable coins, things that are used for payments. I'm going to talk a bit about the basics of Taro. That's something that exists today. That's something that you can play with today. Taro on the Bitcoin blockchain. I'm going to be talking about Taro on the Lightning Network. That's something that's in the work. That's something that you can't exactly play with today, and how we imagine this to develop. Mainly, and I think I only have 2 slides, mainly there's a lot of Merkle trees. Taro pushes this idea of this old idea of a colored coin, all this data simply off-chain. And all that's left is a relatively primitive taproot transaction that has its public key tweaked with some additional information. And now this additional, so you have, you can maybe see there's 3 colors. You have the blue color at the top, that's the Bitcoin transaction. So you have the taproot key, which consists of the internal T key and this additional hash that we use to tweak it. And then, of course, we have the regular Taro rules. So whatever you want to do with a taproot transaction, you can also do here in Taproot. All the opcodes, everything's still there. But we have one branch of that Taproot tree that now represents the Taro tree. And that Taro tree can also consist of a near infinite amount of branches, each of which represent a Taro asset. So I think that's one first thing to remember, that inside of a Taproot transaction, you can have as many Taro assets as you want. Now, each of these, and that's the yellow tree. Now, in that yellow tree, we have the green tree. And the green tree represents a single Taro asset inside of this whole tree. That contains, that's a sparse Merkle sum tree, or Merkle sum sparse Merkle tree, depending on how you want to truncate that. Now that contains the information of who holds that specific Taro asset. That can be only a single individual, or only a single account, but that can also be multiple accounts. Now, I don't think it's, if you want to look all this up, if you want to learn how this works, we have documentation on this. You can read the BIPs. But what I want you to remember is that there is a lot of information, and all this information exists outside of the blockchain. So what actually is being recorded on the blockchain is just a simple Taproot transaction without any OP returns, without any additional metadata, that at least not on-chain. The third thing we have that kind of makes up this Taro witness data are the signatures. So each Taro transaction functions relatively similar to a Bitcoin transaction. It would also have the same opcodes. It would also have the same rules. Of course, because it's not enforced by the Bitcoin miners and who have no knowledge about what this transaction is, it's a lot easier to expand on that. It's a lot easier to add additional codes. It's a lot easier to swap different scripts. But in the end, you still need to have signatures that, yeah, according to the rules of that specific asset, sign and witness every transaction that has occurred. The benefits of Taro come mainly into play when you can batch transactions. This idea that maybe we can get away with just a single UTXO per person or per wallet that holds our Bitcoin, that holds our Taro assets, that holds multiple Taro assets, that in some cases even hold Taro assets for others. I will go into the complications of custody as well. The verification of all this, there's no consensus, there's no global state, there's no blockchain, and rather every recipient of a Taro asset needs to locally verify every single transaction that has occurred before them since the asset was being minted. That pushes a lot of the computational requirements to the clients, where they're relatively cheap. That requires the clients, the peers, to exchange this witness data, because every transaction now has its own Merkle tree, has its own signatures, and you will need to verify them going all back. And all you need to cross-check with the Bitcoin blockchain is whether all these transactions, all these Merkle trees were properly committed into these transactions. And eventually, you are looking at an unspent output that you can easily verify with a light client on the Bitcoin blockchain, whether it's still unspent, and that's how you know it's your asset. The one thing that Taro needs from Bitcoin is resolving double spends, because in a Taro asset, you're able to double spend a transaction in exactly the same way as you're able to transact a Bitcoin transaction, in that I can sign two competing transactions, I can hand them to two individuals, and now both of them correspond to a valid Bitcoin transaction, but only one of these Bitcoin transactions can get confirmed, and so only one of these Bitcoin transactions can then also, one of these Taro transactions can then also be final. The custody aspect is a bit more complicated, which is why I do have a separate slide on this. In that in Taro there are two keys that you own. You don't just own in Bitcoin you own the taproot key. And the taproot key allows you to spend your Bitcoin according to the rules of the UTXO that you have received. Now that still exists in Taro, because every Taro asset is still anchored in a taproot UTXO. But in Taro, you additionally have the keys to your Taro assets. And ideally, of course, we practice self-custody, so ideally we have both. Ideally, we have the ability to transact our Taro asset to a new owner, and that new owner then holds their own keys to the Taro asset, but that owner also holds the keys to their taproot UTXO. In a situation where we deposit these assets or these onto an exchange, we're probably entering an entirely custodial relationship in which the other party then, so you simply only have a claim to these assets in the same way you would today only have a claim to your Bitcoin. Hopefully a legally solid claim backed with actual funds. Now, this idea of a pocket universe is something that comes out of the assumption that Bitcoins aren't backed by anything. That's what makes them so useful. There's nothing that can be rug pulled. There's nobody who can take away the underpinning of Bitcoin. Now, any kind of token you create, any kind of asset you would put into Taro would be underpinned by something. It's either underpinned by a promise, or it's underpinned by another asset. It's underpinned by some financial tools or derivatives, who knows. That is already somewhat of a custodial relationship, and that custodial relationship can be reflected by separating the custody of your Bitcoin keys and your Taro assets. Can't really make a prediction of how much we're going to see these pocket universes emerge, how much people are going to use them, how much people are going to operate them, but it is definitely something that would make the Taro asset economy very, very efficient, because now you only have one Bitcoin UTXO that can map to multiple Taro assets, and each of these multiple Taro assets can have multiple account holders, and the operator of the pocket universe isn't able to steal any of these Taro assets. They aren't able to they still won't be able to forge the signatures necessary to create valid transactions, but they are able to simply ignore requests, or they are able to burn these assets. Because Taro assets function like Bitcoin, nested into a Taproot transaction, we're able to deposit them into channels. We're able to create 2-of-2 multi-signature accounts, and because Taro inherits all the opcodes from Bitcoin, we're able to create HTLCs. We'll be able to create PTLCs. We're able to use them in exactly the same way that we use Bitcoin on the Lightning Network, and that allows us to deposit Taro into a Lightning channel. Now, in this case, Alice and Bob have such a channel. They have deposited what we here call Lightning USD, which is not a real token. It's not a plan. Nobody's going to issue that. We can assume that to be any kind of stable coin issued by anybody. Now, Alice and Bob, of course, in the most simple situation, are able to move those funds forth and back at no cost, at whatever speed their connection and their hardware allows them. Now, the vision of Taro, in the vision of Taro, Taro assets live purely on the edges of the Lightning Network. They don't replace the Lightning Network. There's no plans to create a new Lightning Network with separate assets. The network effects of the Lightning Network are expected to be already are strong and are expected to be even more stronger. There's no point in competing with that. But building this on the edges allows this to very fluently integrate with the existing Lightning Network. So Bob, in this case, we call Bob an edge node. An edge node, he sits at the edge of the Lightning Network where he is willing to provide these atomic swaps from LUSD to BTC. And they are atomic in the same way that Yana, in this case, would forward BTC to BTC. Yana doesn't take on any kind of counterparty risk in this case. Bob also doesn't take on any counterparty risk. But what Bob takes on an exchange risk, because if he takes on LUSD, he forwards BTC that's similar to him kind of buying USD. Now, for that, he's going to charge a fee in a very similar way as a routing node would charge a fee otherwise. But that allows now Alice to hold a US dollar balance in her wallet that remains pegged to the US dollar while still being able to pay any Lightning invoice that she is presented with. Anybody in the world is now able to issue a regular Lightning invoice that doesn't need to know whether Alice is using Core Lightning or LND or a Taro-enabled wallet, and Alice is able to pay it. So how this looks in detail is a bit difficult to foresee, because it not just depends on protocol engineers coming up with sensible tools and sensible procedures, but it also depends on the market implementing these ideas. And in this case, it would be up to Alice and Bob to agree on an exchange rate. So assume that Alice receives a Satoshi-denominated regular Lightning invoice, Bolt 11, Bolt 12, as you would find them here at merchants. And Alice would likely ping Bob and say, how much is that in dollars? Bob would give a recent exchange rate that Alice's wallet could then display, and then Alice has the choice. Does she pay the invoice or not? And if she does pay the invoice, she will construct a route through the Lightning Network in the same way that she would do today, with the difference that this route goes through Bob, and the first channel that only Alice and Bob know about pushes, let's say, in this case, you can see there was a time when $10 were 50,000 sats. So she pushes $10 through that channel, and Bob agrees to forward 50,000 sats that then find their way to the recipient. Now, this can also function the other way around. Alice can also create a regular Lightning invoice that ideally is understood as a regular Satoshi denominated invoice by all the other Lightning Network participants, with the difference that the hop hint that it includes for this unannounced channels between Alice and Bob tells Bob, maybe through, for example, an encrypted TLV blob, how many dollars to forward. These swaps are not necessarily free options. Exactly how Bob, but because Bob and Alice do have a relationship, in this case the relationship is the channel, so Bob might place conditions on these forwarding options, on these price quotes. Bob might say you only get a certain number of free quotes per day or per month. Bob might say I charge you a cent for every of these quotes I give you. Or Bob might also eventually say I'm going to close this channel because you're not acting in the way that I expected you to act. The main benefit of this is that it takes the existing Lightning Network and the existing functionality and the existing market mechanisms and plugs in dollar balances or fiat balances in a way that is highly modular. Because you don't need a single institution to issue a stablecoin, market that stablecoin on exchanges, offer that stablecoin to consumers for cash or bank wires, build a wallet that holds the stablecoin as denomination, and puts capital into the Lightning Network. And rather, those 5 functions can be 5 different business models. A stablecoin issuer can be purely that. They can be purely somebody with a big cash vault that only creates tokens, takes in cash deposits, does a weekly or monthly audit of whether the funds are still there. A market maker might then be a complete separate entity that takes these stable coins, places them on a market, creates a liquid reference price for it. Somebody who is, as I mentioned earlier in Hong Kong, running a small OTC exchange doesn't need an existing relationship with either the market maker nor the stablecoin issuer and is able to, for a fee, swap cash to the stablecoin. You don't need to have your own wallet if you have your own stablecoin, because ideally every Taro-enabled wallet would be able to simply understand every new Taro asset. And you don't need to be a Lightning service provider who then opens these Taro channels with users to provide liquidity. And the expectation is that if we can make all these functions separate business models in a way that they don't need to have existing relationships with each other, they don't need to trust each other necessarily, beyond, for example, trusting the stablecoin issuer, these markets can become very efficient. And these markets can have very low fees. These markets can be very contestable. It can be very easy to start a stablecoin purely with a couple of hundred people as users. Because you now, as a small let's call them a community bank, doesn't need the whole distribution model that otherwise would be necessary to market a stablecoin to the world. They might use local trust. They might be able to leverage the trust that comes with existing community banks to purely issue the stablecoin, to purely hold custody of their clients' US dollar cash, for example. And yet they're able to connect their clients with the whole Lightning Network. So instead of today, if you look at stablecoins, there's kind of almost a winner-takes-it-all market, where you would only accept a stablecoin as payment that is very liquid in your local market. So that's why we see only a couple of stablecoins being really used all over the world. And if you wanted to start your own today, you would have big difficulties getting that accepted as payment or even getting that accepted as collateral. Whereas in a model like Taro, it doesn't matter if you're the only one in the world who has this stablecoin or whether it's one of the largest operations out there, you will be able to connect with the entirety of the Lightning Network. You will be able to pay invoices to anywhere in the world. You'll be able to receive payments from anywhere in the world, all routed through the Bitcoin Lightning Network as this, unbacked, neutral, global settlement layer. The way we think about the Lightning Network might change a little bit if we now have multiple assets in the Lightning Network. You might run into a situation where somebody has a wallet, they have a US dollar or euro balance in it, and they are not so much interested in now paying with Bitcoin. They're not so much interested in now finding merchants that accept Bitcoin. They're now interested in finding merchants that accept Lightning. So Lightning kind of becomes a payment network, a neutral payment network built on Bitcoin, rather than being a payment method of Bitcoin. So you might see you might see a change from I want to pay Bitcoin over the Lightning Network to I want to just pay with Lightning. It's none of your business what assets I hold, and I don't need to know what assets you receive. We're simply using Bitcoin as the global settlement currency because that's the one that has proven to be the best at this. The potential for Taro are, of course, much bigger than this. There's lots of, theoretically, you can issue any kind of assets on it, you can create NFTs on it, but the vision is very much one for connecting billions of people to each other as payment, over a payment rail. The idea is that we have now billions of people on a global on a global network for information, but what we don't have is we don't have these billions of people on a global market in which they can economically and commercially interact with each other. We have a lot of people who are able to go online, participate, read Wikipedia, read the news, publish news. What we don't have is a network for people to get paid, for people to sell their services to each other. And that's what Taro wants to be able to achieve. We do have a lot of information up there. The slides are on the conference's content management system. So if you look at the schedule, you should be able to find these slides. You should be able to follow these links. I do want you to know that Lightning Labs is hiring. Lightning Labs is looking for people who can build not just the Lightning Network, but also Taro. I do want you to know that we want to hear from you if you're planning to building on Taro, if you're planning to be any of these entities that either issues or trades or provides liquidity for Taro assets. This is very much similar to other products by Lightning Labs. It's very much driven by market demand, and this is built for commercial entities. This is not an intellectual exercise, even though it is intellectually very interesting. This is meant to be used by billions. I do have time for questions, I believe.
Perfect. Yeah, we can. And
thanks for that presentation. Not to inject my own views, but as someone representing Lightning Labs, can you differentiate Taro and RGB for us?
So maybe I get some help from Federico. Taro is a lot more narrow than RGB. RGB is capable of doing a lot more. RGB is not specifically focused on this use case of payments. So I say the focus and the vision is relatively separate. If you look at some core technologies that are being used, they're also relatively different. For example, these whole trees of Merkle trees, that's very much a Taro thing. I think how they are similar is in that they both allow you to create assets on the Bitcoin blockchain, and they make use of Taproot, which is, I think, both it's relatively difficult to imagine that the market for assets on Bitcoin or on the Lightning Network is a winner-takes-it-all approach, because the network effects of those different assets might not necessarily be strong enough to create a winner-takes-it-all. So I think there is lots of space for different implementations and different ideas. If you are looking for smart contracts, you're probably looking more at RGB, and if you're looking at stablecoins, you might be looking closer at Taro.
Okay, I have a question regarding when you make a Taro payment, you have to send the Taro assets towards the UTXO of the receiver. Who is responsible to create that UTXO, the sender or the receiver needs to already have one?
Great question. So the way you can, I'll encourage you all to, on testnet, on rectest, on simnet, get a Bitcoin node, get an LND node, and then run Taro. The user flow in this case, in a very, let's take each step, works a bit like this. You have the recipient who needs to first kind of create an invoice. We call this a Taro address, but the recipient needs to say, I want to receive this asset as identified by this assets identified by their Genesis mint transaction, and I want a certain number of them, and this is my witness data. So you have it looks in length relatively similar to a Lightning invoice. It contains all the data necessary that both the sender and the recipient should now be able to create exactly the same tree structure. Now, because they create exactly the same tree structure, they're able to, and with the same Taproot internal key, they know kind of exactly what Taproot address, they're both able to come to the same conclusion of what Taproot address those assets now live in. And the sender is now responsible for actually creating that transaction and signing it in a way that is valid in the Bitcoin network and getting it broadcasted to the network with an appropriate fee so that the recipient can then see, yes, exactly the address that I expected now has an unspent UTXO. And what the sender and recipient then need to do is the sender has additional, so if you remember not important, if you remember the tree structure, there's also the witness data. And that witness data now includes the signatures of the sender, Taro signatures of the sender. So they need to forward that information back to the recipient, because only then can the recipient really prove that they have legitimately received those assets. And those are a lot of steps. There's many ways to make the user experience a lot more smooth, but I think it's quite important to know these details.
So if the sender needs to create the UTXO with like a right script, then he also needs to deposit some Satoshi like above the dust limit, I imagine, and
yes.
They need to also agree through the invoice how much Satoshi will deposit. It will be a standard amount.
Yes. Yeah, so as it functions today, a Taro UTXO lives inside of a Bitcoin UTXO of 1,000 Satoshis. So as of today, in a very naive model, you would just attach these 1,000 Satoshis. You kind of pass them on. Of course, if you think about the one UTXO per wallet model, it would be relatively easy for the recipient to also provide an input that provides this amount. And now then this input can be over their wallet balance, right? Which might be more than 1,000 Satoshis. So now the sender only needs to provide the transaction fees.
Okay. Sorry, we are
Yeah,
a little bit
we're
running
done.
behind time now. Finally.
Yeah. Download
Leo.
the Taro client, try it out. It's a 0.11 was only tagged yesterday. It works. It works. It's fun to use.
Perfect. Thank you, Leo. And tackle Leo later for more questions. The one who had the questions here. And it's great to see that we can see that we can build all these stable coins without actually shit coins and